Remember when buying a motorcycle meant freedom, rebellion, and maybe just a little midlife crisis? Yeah, well, now it mostly means debt. Because in 2025, motorcycle prices have officially gone off the rails. And I'm not just talking a few bucks more. We're talking price hikes so bad that some riders are genuinely wondering if they should just Uber forever. So what caused such a huge price spike? And what does it mean for the motorcycle industry? You see, back in 2020, you could walk into a dealership with around 7, maybe 8 grand, and walk out with a solid new ride, something like a Kawasaki Z400 or a Yamaha MT-03. Entry level, sure, but stylish, powerful, and affordable. Now, that same class of bike is pushing 10 grand. And no, it doesn't come with a gold exhaust, a leather-clad robot, or a free back massage from Keanu Reeves. Just inflation. We're seeing prices rise across the board from sport bikes, cruisers, adventure bikes, and even budget commuters. For instance, Harley-Davidson's Softail Standard used to be under 13 grand. Now you're looking at closer to 16 just to start, and that's before you add tax, fees, freight, setup, and the dealer's generous little market adjustment because apparently they think they're selling Teslas now. Let's not forget gear like helmet, gloves, jacket. That's another $800 to $1,500 if you care about, keeping your face. And if you're thinking, okay, I'll just finance it, get ready to clutch more than just your handlebars. Interest rates are brutal. Thanks to the Fed's rate hikes, even people with good credit are seeing rates at 8 to 12% on motorcycle loans. For a lot of riders, that monthly payment is looking suspiciously like a used Civic's car note. And insurance? Yikes. If you're under 30 and ride anything with more than one cylinder, insurance companies now treat you like you're planning to launch off a canyon Evel Knievel style. $1,200 a year minimum, sometimes more. Let me break it down further. That sweet little bike you saw on the showroom floor for $8,500? After all the fees, financing, and insurance, you're paying closer to 14 grand over 5 years. For a Rebel 500, that's not even rebellious anymore. That's just financial Stockholm syndrome. Now here's the kicker. Salaries aren't going up to match any of this. Most riders still make what they did 5 years ago, except now the bike costs 40% more, interest is higher, and lenders are way less generous. Banks have tightened credit. People with fair credit are getting rejected, while people with great credit are getting approved, but with terrible rates. That's why repossessions are rising. More folks are getting in over their heads, missing payments, and watching their bike ride off into the sunset on a tow truck. And honestly, it's not even their fault. A lot of riders are just trying to get back into the hobby post-pandemic or make a first-time purchase. But the system isn't designed for them anymore. It's priced for people who don't need financing in the first place. This isn't just anecdotal. According to KI Wave Motors, average motorcycle prices have increased over 40% since 2020, and while manufacturers are partly blaming supply chain costs, raw materials, and R&D, it's getting hard to ignore the feeling that bikes are being priced out of reach on purpose. Because here's the ugly truth. If you're not already a rider and don't have a lot of disposable income, this industry is starting to feel like it doesn't want you. And that's dangerous, because the one thing motorcycles have always had going for them, accessibility, is slipping away fast. So what happens when bikes get too expensive for the average rider? Well, we're starting to see it. Sales are slowing, dealerships are sitting on stock they can't move, and repos are flooding back in. And if that sounds a little too familiar, it should. Because this is starting to look a lot like what happened in '08, just before the bottom fell out. So the prices are out of control, financing is brutal, and the average rider's wallet is starting to cry for help. But here's the real question. What happens when people stop buying bikes altogether? Well, that's when you start to see the wheels come off. And right now, those wheels are wobbling like crazy. Dealerships across the US are reporting the same thing. Foot traffic is slowing, bikes are sitting unsold, and even used inventory is collecting dust. Some sellers are clinging to pandemic-era pricing like it's still 2021, but buyers, they're not having it. You know how in 2020 and 2021 people were panic buying bikes because it was the perfect socially distant hobby? They had stimulus checks, time on their hands, and a sudden desire to channel their inner Mad Max. That boom created a weird bubble where anything with 2 wheels and a motor shot up in value, even if it was 20 years old and held together with duct tape. But that was then. Now buyers are back to reality, and many are looking at today's prices and walking right back out the door. And it's not just new bikes suffering. Even the used market, which held strong for years, is starting to crack. There are too many bikes priced too high, and not enough people willing or able to pay. The result? Inventory pileups. Dealers are sitting on machines they can't move. Private sellers are getting lowballed or ignored, and auction houses are beginning to see a quiet surge of repossessed motorcycles. And if that last part sounds familiar, it's because this is exactly how the 2008 crash started. Back then, credit was easy, bikes were selling like hotcakes, and dealers were riding high. Then, boom, credit tightened, defaults rose, and suddenly, those high-end cruisers and sport bikes were going for pennies on the dollar. Sound familiar? The data is starting to match up too. Reports from Powersports Finance Insiders show a sharp increase in motorcycle loan delinquencies, and not just for big purchases like touring bikes. Even smaller bikes, scooters, and budget commuters are being repossessed at rates we haven't seen in over 15 years. Lenders are beginning to panic a little. They're pushing back on approvals, raising down payment requirements, and making it harder for first-time buyers to qualify. But wait, it gets worse. Because while buyers are hesitant and lenders are nervous, manufacturers haven't hit the brakes yet. Some brands are still cranking out 2025 models like it's business as usual, and that's creating a nasty traffic jam. Showrooms are packed with bikes with no one around to ride them out. It's a classic oversupply meets under-demand situation, and in economics, you don't need a PhD to know how that ends. We're seeing dealers offering aggressive discounts, desperate financing offers, and big clearance events for bikes that aren't even old stock. That's not normal. When brand new 2025 models are already being discounted in the spring, you know there's trouble behind the curtain. And let's not forget the repo scene. Repossession companies are quietly booming right now. Some of them are reporting motorcycles as the fastest growing segment in their inventory, with units getting picked up daily across urban and suburban areas alike. It's like a reverse biker rally, except instead of roaring into town, your bike gets towed out with a notice and a bill. Now, none of this is just speculation. Even insiders are starting to whisper it. This isn't a seasonal slump. This could be a structural shift, a moment where the entire industry realizes it's overshot the market and priced itself into a wall. And here's the sad irony. Most riders want to buy bikes. Enthusiasts are still out there, still dreaming about cruisers, naked bikes, and ADV machines. But when prices are sky high, interest rates are hostile, and wages are flat, the dream starts to fade. So we've got dealers drowning in inventory, buyers frozen out of the market, lenders pulling back, repossession spikes, and manufacturers in denial. It's not just a rough patch, it's the setup for a crash. And maybe you're thinking, well, things always slow down in the winter, this is just seasonal. But it's not just seasonal. This is happening across warm states too. California, Florida, Texas, places where bikes never hibernate. When dealerships in sunny states are struggling to move units in May and June, that's your red flag right there. And here's the twist. Unlike '08, this time it's not triggered by a global housing meltdown or a Wall Street collapse. It's the motorcycle market doing this to itself, through overproduction, overpricing, and a lack of attention to who their real buyers are. They forgot that most riders aren't celebrities, influencers, or tech billionaires. They're just regular folk who want to ride on weekends, commute on two wheels, and relive their youth a little. And when you make that dream unaffordable, it doesn't just hurt the buyer, it kills the entire market. So yeah, we're not just seeing a slowdown, we're seeing the warning signs of a full-blown motorcycle market crash. The kind of crash where dealers shut down, prices nosedive, and the bikes everyone overpaid for in 2023 end up on Craigslist for half price in 2026. If you're thinking of buying a bike, you might want to wait. If you're a dealer, you might want to start slashing prices before the repo man does it for you. And if you're wondering how bad things might get, well, we're going to take a trip back to '08 and see how the last crash unfolded, because the parallels are starting to look uncomfortably familiar. Now let's rewind the clock for a second. The year is 2008. You're flipping open a Motorola Razr, Nickelback is still topping the charts, and the economy? Oh, it's crumbling faster than your uncle's back after a long ride on a hardtail. But for the motorcycle world, 2008 wasn't just a financial hiccup, it was a full-blown meltdown. Leading up to the crash, the bike market had been booming. Manufacturers were pumping out units like there was no tomorrow. Credit was easy, loans were generous, and if you could fog up a mirror, chances were someone would hand you keys to a brand new cruiser on the spot. People were treating motorcycles like fashion accessories. Harley couldn't keep up with demand. Honda and Yamaha had their sport bike lines flying off shelves. And dealerships were loaded with floor stock because hey, why not? Everyone was buying. Until they weren't. When the 2008 housing crisis hit and the financial system tanked, the dominoes started falling. People lost jobs, defaulted on loans, and suddenly that shiny Softail Deluxe in the garage didn't seem as important as paying rent. And the market? It collapsed. New motorcycle sales in the US plummeted by over 50% between '07 and 2010. That's not a dip, that's a cliff dive. Some dealerships closed their doors and never reopened. Others slashed prices, laid off staff, and begged customers to come in. It was brutal. And here's the thing, it wasn't just about sales. Used motorcycle prices nosedived. Repossession lots were overflowing. Auction houses were flooded with bikes that nobody wanted to buy, even at rock bottom prices. The average age of bikes on the road jumped from 6 to 13 years in just a few seasons because people were holding on to what they had. No one was trading in and no one was upgrading. Now fast forward to 2025 and tell me this doesn't feel eerily familiar. Prices are inflated, consumer interest is cooling, financing is becoming more difficult by the week, and repos are climbing again. We're seeing a carbon copy of the same pattern. In fact, if you lined up a graph of repo rates, interest rate hikes, and new sales volume from 2008 and now, you'd probably need a second pair of eyes to tell which one is which. Even the consumer behavior is the same. Riders are holding off. They're browsing online, maybe going to a dealership just to look, but they're not signing anything. Not with a 9% loan staring back at them. And dealerships are starting to get nervous. Some are already quietly offering buy one get one service packages, throwing in gear discounts, or eating freight fees just to close deals. That's the same kind of panic selling we saw in the early stages of the 2008 collapse. But here's the kicker. Back then, at least the crash came from outside the motorcycle world. It was Wall Street, housing, and the global economy. The motorcycle industry just got caught in the crossfire. Now, it's internal. This time, the motorcycle market created its own bubble, and now it might pop it all by itself. Manufacturers overproduced, dealers overpriced, financing companies overextended, and nobody really stopped to ask, wait, can our core buyers actually afford this? It's like watching someone build a luxury apartment complex in the middle of the desert, and then act surprised when nobody moves in. And here's the most uncomfortable truth. If you thought 2008 was bad, 2025 could be worse. Why? Because back then, motorcycles still held their place as an affordable form of escape. You could still find deals. You could still finance a ride without needing a cosigner and a miracle. Now, the average entry-level bike costs nearly as much as a used car. Maintenance is up, insurance is up, and that budget-friendly reputation motorcycles used to have, it's fading, fast. So when I say 2025 could be worse than the 2008 crash, I'm not being dramatic. I'm looking at the same warning signs, and this time there might not be a soft landing. Now, we've talked about rising prices. We've seen how buyers are backing off and how this whole thing is starting to look like 2008 in disguise. But what does all of this actually mean for the people inside the motorcycle world? The builders, the sellers, the everyday folk who live and breathe two wheels. Well, spoiler alert, nobody's coming out of this untouched. Let's start with the big dogs: Harley, Honda, Yamaha, BMW, KTM, and all the other badge makers trying to look confident while the floor crumbles beneath them. On the surface, they're still releasing new models, still putting out shiny press releases and rolling out 2025 bikes with the same enthusiasm they had 2 years ago, but dig a little deeper and things aren't nearly as rosy. First, they're facing a classic squeeze. Production costs have gone up, but demand has gone down. Steel, rubber, electronics, everything is more expensive. Labor costs are higher, and shipping? Don't even get me started. It's a logistical nightmare. Now imagine trying to launch a new bike line when dealerships are already choking on unsold inventory. It's like showing up to a potluck with 3 pizzas after everyone has already eaten. Some manufacturers are quietly scaling back production. Others are pushing delayed launches. Harley, for example, recently pulled its 4-year forecast due to uncertain global tariffs, but that's corporate speak for we're not sure people are going to keep buying these bikes. And to be fair, they might not be wrong. Smaller brands and startups are walking a tightrope. Companies trying to break into electric motorcycles or budget segments are burning through investor money without enough buyer traction. There's innovation happening, sure, but not enough wallets opening to support it. And it's not just about the numbers. The real change here is strategic. Manufacturers are being forced to rethink their entire approach, who they're building bikes for, what price points make sense, and whether the future lies in performance, luxury, or basic utility. Right now, no one has a clear answer. And if manufacturers are under pressure, dealerships are already sweating bullets. Walk into almost any showroom today and you'll see a weird contradiction. Bikes everywhere, but barely anyone shopping. Inventory is up, but movement is down. Units that would have sold in a weekend back in 2021 are now sitting for months. And the longer they sit, the more floor plan interest the dealer pays. Yes, that's right. Dealers finance their inventory, and when bikes aren't selling, those monthly interest payments start stacking up like unpaid parking tickets. It's a slow bleed. And here's the other problem. Dealers can't just slash prices. They're caught between manufacturers who expect them to hold the line on MSRP and customers who are walking out over the price tags. So they try to get creative, bundling in gear, adding service packages, maybe eating the freight cost, but none of that fixes the underlying issue. People just aren't buying. Some are managing to stay afloat through side businesses like selling gear, servicing bikes, doing custom work, but others are one bad quarter away from locking the doors. And if this trend continues, we could see a wave of small and mid-sized dealerships close down by 2026. That's not just bad for business, it's bad for the entire riding community, because once those local dealerships are gone, they're not coming back. And finally, we get to the heart of it, the rider. Whether you're a weekend warrior, a daily commuter, or someone just dreaming about their first bike, the current state of the industry is hitting hard. For starters, bikes are no longer the affordable freedom machines they used to be. A decent mid-range motorcycle used to be a smart, fuel-efficient alternative to a car. Now, it's a luxury purchase, especially once you add gear, insurance, financing, and maintenance. Even used bikes, which once offered a reliable path to riding, are overpriced. You'll see a 15-year-old Ninja 250 with 200,000 miles going for $4,000, and the seller will swear it's vintage. People are getting desperate to recoup what they overpaid during the pandemic boom. And let's not forget new riders, the lifeblood of the future motorcycle scene. They're being priced out before they even get started. It's hard enough convincing your partner, your parents, or yourself that buying a bike is a good idea. Add a monthly payment the size of a mortgage, and suddenly, yeah, maybe they'll just buy a scooter, or worse, a Tesla. Then there's the psychological toll. Riders who financed bikes during the boom are now watching the value tank, upside down on their loans, and wondering if they made a huge mistake. That stings, and it doesn't exactly inspire confidence in the next generation of buyers. The bottom line? Everyone's feeling the pain. This isn't just a buyer problem, or a seller problem, or a manufacturer problem. It's an ecosystem problem. When prices skyrocket, buyers vanish. When buyers vanish, dealers drown. When dealers drown, manufacturers panic. And when they panic, innovation stalls, models get cut, and the entire industry starts shrinking. That's where we are. And if something doesn't give soon, whether it's pricing, financing, or strategy, we might see the motorcycle market enter a recession of its own. Not just a correction, but a full-on retreat. Less variety, fewer local dealerships, higher costs across the board. It's a hard pill to swallow, especially for a community built on freedom and rebellion. But the industry's current path? It's heading toward a dead end. So here we are. We've watched prices climb higher than a stunt rider on a wheelie. We've seen dealers stuck with unsold stock, manufacturers scratching their heads, and everyday riders priced out of the lifestyle they love. Repo trucks are on the move, showrooms are going quiet, and the whole industry feels like it's teetering at the edge of something big. The question now is this a full-blown crash waiting to happen, or is there still time to pull out of the skid? Well, let's not sugarcoat it. A crash isn't guaranteed, but the warning lights are flashing on every dashboard in the business. Let's break it down. The first sign is price versus perceived value. Right now, we've reached a dangerous tipping point where the average consumer is no longer convinced that a motorcycle is worth the cost, and that's a big deal. Because for decades, part of what made bikes appealing wasn't just the speed, the culture, or the sound. It was the idea that you could get all of that for less than a sedan. It was the ultimate bang for your buck. But now, when a base-level cruiser costs as much as a small car and monthly payments are flirting with $700, that value proposition evaporates. That's not freedom, that's debt. When buyers start seeing motorcycles as overpriced toys instead of accessible tools or lifestyle enhancers, you've got a big problem. It's no longer an emotional decision, it becomes purely financial. And if people don't need a bike, and now they can't afford one, guess what? They'll just stop buying, and they already are. Now let's talk about credit, because this is where the storm clouds get darker. The motorcycle industry has always leaned heavily on financing. Sure, there's the rare rider who walks in and buys a $20,000 touring bike with cash, but most of us, we're financing over 5, 7, 10 years. But interest rates are no joke in 2025. Thanks to inflation and the central banks playing financial whack-a-mole, average APRs are sitting between 8 and 13%, and even that's only if you've got strong credit. Subprime buyers? Forget it. Some lenders aren't even taking applications. Others are demanding huge down payments or cosigners, turning the process into an uphill battle. That means fewer approvals, fewer sales, and more delinquencies. This leads us straight to the third sign. Repossessions are surging. This is the one nobody in the industry wants to talk about, but the numbers don't lie. Motorcycle repossessions are rising, fast. Some repo services are reporting that motorcycles now make up a bigger chunk of their recovery volume than cars. That's not normal. You don't see the repo man coming after bikes unless there's real financial stress in the market. Because bikes are usually lower priority defaults, people will miss a car or house payment before they default on their ride. But when bikes start getting repoed in large numbers, that means we've hit a new level of consumer strain. People bought bikes they couldn't afford during the pandemic boom, and now the bills are coming due. And when those repos flood the used market, it puts even more pressure on dealerships and private sellers trying to move their own inventory. It's a downward spiral that's hard to escape. The fourth sign is manufacturer missteps. If the industry was reacting quickly, maybe we could brace for a soft landing. But right now, the big manufacturers are still moving like it's 2021. We've got brands pumping out new models, slapping premium prices on them, and pretending like the average consumer's income has magically kept up. Spoiler alert, it hasn't. Instead of focusing on affordability, many brands are leaning into luxury, tech, and niche models, premium cruisers, adventure bikes with radar and heated seats, and electric bikes that cost more than a used Tacoma. Yes, innovation is good, but what good is it if no one can afford the bike? And while some manufacturers are finally starting to roll out smaller, more affordable options like the Honda CL500 or Yamaha XSR125, they're doing so cautiously and not nearly fast enough to turn the tide. So, is the crash coming? Short answer, if things keep going the way they are, yes. Not a little dip, not a seasonal lull, but a genuine market correction that will hit hard across the board. Dealership closures, major price drops, a massive shakeout of over-leveraged lenders and underprepared sellers. We're talking massively discounted new bikes by 2026, used market oversaturation, slashed production targets, entire model lines getting cut, layoffs in manufacturing and retail, and riders walking away from the hobby altogether. We're not there yet, but the signs are undeniable, and unless something changes soon, that's the direction we're heading. But can this still be avoided? It's a fair question. After all the red flags and warning signs, it's easy to assume the ship is already sinking. But the truth is, while the motorcycle industry is clearly in trouble, it's not doomed, at least not yet. There's still time to course correct, still time to downshift before the engine seizes, but only if the right people start making the right moves, and soon. First, the most urgent change needs to come from the top, from the manufacturers themselves. The companies designing and building these bikes have to accept a hard truth: they've priced out their audience. For years, brands have treated motorcycles like lifestyle luxury items, packing them with electronics, riding modes, touchscreen displays, radar systems, and creature comforts that might look great in a press release, but push the price tag far beyond reach for most working-class riders. That has to change. We need a shift in mindset from high-margin prestige to high-volume practicality. This means getting back to basics. Manufacturers need to build bikes that are affordable, approachable, and actually available. That doesn't mean gutting performance or quality, it means trimming the excess. Focus on smart, well-balanced machines that do the job without the fluff. Not every entry-level bike needs LED mood lighting or 4 ride modes. Not every mid-range model needs TFT dashboards and cornering ABS. What people need are solid, dependable motorcycles that hit the sweet spot of price, performance, and practicality. But pricing alone isn't the only fix. Accessibility is also critical. The industry has long leaned on financing to make sales work, and with good reason. A $9,000 bike is a lot more palatable than $145 a month. But in 2025, those days are gone. Interest rates have become hostile. Lenders are tightening up, demanding bigger down payments, higher credit scores, and stricter terms. That squeeze is cutting out entire demographics of potential riders, especially younger ones. If the industry wants to survive, leaders and manufacturers need to get creative again. That could mean new financing structures, longer terms with fixed low rates for entry-level bikes, loyalty-based programs, or first-time buyer incentives. It might even require brands to subsidize financing the same way car companies do. Yes, that eats into profit margins, but it's an investment in keeping your customer base alive. The motorcycle world can no longer treat financing like an afterthought. It's now one of the most important tools in making the dream of riding even possible. At the dealership level, there has to be a hard pivot toward realism. Over the past few years, a lot of dealerships got caught up in the frenzy. Bikes were flying out the door, prices were marked up with market adjustments, and buyers were willing to pay premiums just to get their hands on anything. But that moment has passed. Customers are more cautious now. They're paying attention. They're comparing online. If dealers want to win them back, they'll need to drop the games. Transparency has to become the norm. That means honest pricing, no mystery fees, no freight surcharges hidden in fine print, and no "we'll throw in a helmet if you buy today" tactics. Trust needs to be rebuilt. Customers should walk into a dealership and feel like they're having a conversation, not entering a negotiation. If you want to move units, you have to make people feel good about the purchase, not tricked into it. Manufacturers also need to stop designing bikes solely for the top of the pyramid. Not everyone's a seasoned rider upgrading to their third $20,000 touring rig. There are first-time buyers, urban commuters, returning riders in their 40s, folks looking for weekend therapy, not just horsepower. The market needs more lightweight sub-$7,000 options that don't feel like compromises. Bikes that offer real-world performance, comfort, and reliability without turning into plastic toys or stripped-down afterthoughts. And then there's the culture. The industry has to get serious about rebuilding the riding community from the ground up, because this isn't just about sales, it's about sustainability. Local dealerships need to become more than just showrooms. They need to be community hubs, organize ride events, host new rider seminars, partner with schools, encourage mentorship between veteran riders and rookies. Make your dealership feel like a place of belonging, not just a place to spend money. Likewise, manufacturers should be investing in visibility, not just glossy YouTube ads or Instagram influencers, but boots-on-the-ground presence. Support local racing, sponsor MSF training programs, work with cities to promote motorcycles as viable commuting tools, let people test ride, let people touch the product. The more people interact with bikes, the more likely they are to fall in love with them. Most importantly, the entire industry, from the execs at Honda HQ to the guy sweeping the showroom floor, needs to remember what made motorcycles magical in the first place. It's not about profit margins, tech specs, or marketing copy. It's about freedom. It's about showing up at sunrise with no destination, twisting the throttle, and disappearing into the horizon. That feeling can't be quantified, but it's the soul of motorcycling. And when you price that feeling too high, when you make it unreachable, you don't just lose customers, you lose believers. So yes, this crash can still be avoided, but it won't be because of luck. It'll be because the people who shape this industry decide to listen, to adapt and simplify, and to open the gates again, not just for the wealthy or the hardcore, but for anyone who dreams about the open road. Because in the end, motorcycles don't need to be elite, smart, or status symbols. They just need to be rideable, and if the industry can remember that, there's still a road out of this. The motorcycle industry isn't dead, not even close, but it is on the edge, and whether we see a crash, a correction, or a full-on renaissance depends on what happens in the next 12 to 18 months. If prices come down, if access opens up, and if manufacturers listen to their audience, this could be the shakeup that saves the industry long term. But if they ignore the signs, if they keep pretending everything's fine, then 2025 won't just be the year prices got out of hand, it'll be the year the motorcycle market hit the wall. Because you can't keep selling freedom at luxury prices. At some point, the road runs out. If you enjoyed this video, make sure you subscribe to the channel and turn on the notification bell. See you in the next video.